On today's class, we're going to be handling all the basic indicators you need to know as a forex trader. In case you're watching me for the first time, my name is BTC and this is the jumper. Indicator has actually proven to be one of the most useful tools which we use to analyze the forex market. And on the top of our list today, we have the RSI, which is, as you can see on my screen, and RSI is basically stands for the word relative strength index, which is an indicator used to determine the strength of the market, the volume, the direction of the market, and when the trend is about to reverse. Now, after then, we also have the second one, which is the MAA or the ribbon, moving average. Now, what is moving average? Moving average is more like an indicator which we always use to indicate our entry, our exit, to help us to place our stop loss and also to know the direction which the market is basically tending to. Now, on the third of our list, we have the ATR, which stands for average true range. What is ATR? ATR is an indicator used for setting stop loss. Basically, it helps us to determine the volatility of the market. Example, let me give you guys an instance here. Looking at my screen, this is the Bitcoin chart, 15-minute chart to be specific. And if you notice here, you see that we actually have a support here at this place. Now, a lot of support and resistance trader will definitely place a buy somewhere around here now. Now, if you look at this and I see the market actually came to this place, had this first support, came here, has under rejection, the rejection here, and this was the fourth rejection. Now, let's say we place a buy at this particular spot, which is here now. And obviously, from what we have been told, we are told to place our stop loss below the market, or rather below the support. Now, if you place your stop loss down here, you realize that the market actually will definitely kick you out and place our take profit at the topmost of the market here. You know that the market will definitely came here. Not that this thing don't hold, but it actually kick you out. Why? Because the market was actually volatile. So now to avoid such scenarios, what do? We use the ATR. This is the ATR here. I place right, type in the ATR. This is the ATR here. I just open the ATR indicator, as you can see. I just when I put this the ATR will definitely appear at the bottom of my listen. Now I came to this spot, as you can see right here now, and I look at the ATR. What is the volatility of the market at that particular spot? The volatility of the market at this particular spot on Bitcoin is $250. Understand? Now, if I place my stop loss at the bottom of this place, what then do? I'll add extra $250. Now, what is actually the lowest point of this? The lowest point of this place is 500 and 550. Now 500 and sorry 93,550. 93,550 minus 250. What do we have? 93,550 minus 250 should give us 93,200. And if we place this market at 93,200 right here, you see that the market actually came here, it absorbed it, and this was actually to be a success. Let me give you guys another example where this kind of thing happens again. Okay, if you look at this particular spot now, those that actually trade the ICT traders, they will place a buy around this place, hoping that the market will come down here and take a rejection. Now the ICT trader will place a buy here, and what happened? I can see the market actually came down here, liquidated, mitigated this particular zone. Now, if you place your stop loss below here, definitely this market will kick you out. But if you use ATR to place your stop loss down here, you see what is ATR here? 350. And what is the lowest low here? The lowest low here is 96,000. 96,000 minus 350. That should be we're looking at 97,000. We're looking at 95,700, and that is around here, and that is somewhere around here. 700. As you can see, it actually came, it absorbed it, and what happened? It continued moving on. So I can go on and give you instance where this ATR was able to save us from taking losses that we could have gladly avoided. You look at somewhere here again around this area also. The same SMC people do definitely place their buy somewhere around here, and also they will place their stop loss somewhere around here. Now let's look at it now. Wait for the market to come to this zone. As you can see, market actually came to this zone. As it came to what happened, it's actually mitigated this point now. If I'm to place my stop loss definitely down here, it will be definitely below this point. At this point, that's where I'm going to place my stop loss. But adding ATR, I'm using ATR to determine where my stop loss is going to be. I'll be placing my long somewhere here. Then what is my ATR at that particular spot? The ATR at that particular spot is almost 490. 490 minus the lowest low, which is 100, 100 and 1000. 100 and 1000 minus, let's go with 500. That should be 99,500. Let's place this stop loss at 99,500. As you can see, what happened? It actually was able to absorb it, and our take profit is meant to be at the next high, or possibly we can also place it at the higher high if we wish, somewhere here. As you can see, this ATR actually saved us from some losses which we could have taken, and this just on one pay, that is Bitcoin. I'm just giving you some. We're actually gonna be doing video on each of this indicator one after the other, the ACR, the RSI, the moving average, and also on our list here we have the MACD. The MACD. What is MACD? The MACD is basically an indicator that helps us to determine the direction of the market, and also we use it to determine our entry and also our exit, just like the RSI. MACD also has the same way the RSI does. It helps us determine the volume of the market, the volume with ratio to the price. Then at next one also we have next on our list we have our Bollinger Bank. I don't know if this is one of the most popular indicator you can ever hear. The Bollinger Bar. Bollinger Bar is more like a ribbon. That is a ribbon that is used to determine the volatility of the market. The volatility of the market. If you realize that all these things actually basically do one, most of them basically do similar but not same thing actually. And this is the Bollinger Bank here. Why the last on our list, which last but not the least, is the Fibonacci, or rather the Fibonacci Retracement. And this is one of the most popular indicators you can ever think of. Which talk about fib level, and it helps us to determine the retracement. If the market is actually on a trend, if it traces back, where is it gonna pull back to before it takes off and the rest? This is what we use the Fibonacci to determine. So we're gonna be treating each of these indicators one after the other distinctively and explaining how to use them. And basically, remember that I do, you guys, I will be teaching you guys how I use these indicators to trade, and also how you can use it correctly, because I noticed that a lot of people are using this indicator wrongly, and which actually result to why people are taking unwanted losses.